We can start. Hello, everybody, and welcome. I'm Bonnie Halper. I write the weekly Startup One Stop newsletter. I'll put the link in the chat. And I'm a super connector. I've been involved in the tech space for a long time, working with founders and just meeting everybody before when they were first starting their companies in the Web 1.0 day, and they're now all household names or investors. So I work with founders on their pitch decks and their talking points, then make introductions where and when appropriate. I want to thank Joseph Katz for hosting this, as always. Joseph, tell us about you.
Thank you, Bonnie. Good to see everyone. Thank you all for joining. Joseph Katz, results-driven marketer. I've worked in both corporate America and early-stage tech startups. I guess my claim to fame is employee number 3 at a company that ultimately had 100 million plus exit. And if the company wants to go from unknown to well-known, I can probably help you do some of that. So happy to talk afterwards. I would encourage everyone to put their contact info into the chat. We keep the introductions short, so that way people can get in touch with you.
And Rebekah is our guest investor this week. I've known Rebekah since the Flatiron School days, and now she's part of a brand new fund. She's going to tell us all about it. Now, Rebekah, we always go around the room and you can either introduce yourself first and tell about your background in the new fund, which I want to hear more about, that's for sure. And then we can have everybody introduce themselves, and then it's all Q&A, but it's up to you if you want to use in the room first, or if you want to talk about yourself and your background and the new fund.
Yeah, I can talk about myself for a minute, which doesn't really change based on who's in the room. And then I would love to hear about you all before we continue the conversation, so it can be relevant and helpful, hopefully. So I'm Rebekah Rombom. I've been working to build companies my whole career. So I've been a kind of professional early stage executive for quite a while. My last company is called Flatiron School. It's a post-secondary training education company for technology skills. So we help adults transition careers. I helped start that company in 2013, ran that company for about 10 years. My specialty is running commercial operations and sales. So I've run nearly every commercial department there is I had run it within Flatiron School. We sold Flatiron School to WeWork in 2017. We spun it out to a PE firm in 2020. I left Flatiron the end of 22, and since then, for about a year and a half, I've been working as a embedded CRO and COO, so part-time or interim executive in companies from around 1 million to 80 million, solving expensive problems as a part-timer, and then structuring departments and big swaths of organizations to operate successfully when I fly away. I'm also now an investment partner in a new fund called NextWave NYC, which is fully backed by Flybridge Capital. So it's a pre-seed arm of Flybridge Capital, focused on supporting the next wave of what we think will drive the next great paradigm of companies that skyrocket in this environment, driven by AI. We think that will be driven by AI. So we're particularly interested in AI-driven companies. And we're particularly interested, they're not totally dogmatic about supporting the next wave of founders in and around New York City.
I'll have everybody introduce themselves, and considering that you come and help founders when they get stuck, I'm sure you're going to have a lot of questions on that front today. So I'm just going back to so Sandra, I know you have to leave early. Why don't you introduce yourself?
Thank you. My name is Sandra Connor. I'm in Indianapolis, Indiana, serving the globe to help other businesses avoid expensive marketing problems. Yes, Video Grows is the name, and we do provide video-enhanced strategies and tactics, but mainly we get that marketing set of strategies formed so that ROI will be high. Sandra Connor, videogrows.com.
Thank you. Ian.
Good morning, everybody. Ian Garmez. I'm the COO of the Virtual Film School. I'm in Toronto, but the company is based in Los Angeles. And we are a live online training program for aspiring influencers. And currently doing business in Canada and Japan and soon in the US.
Good on you. Oh, the US comes last, huh? Fine. Robin.
Yes, I am Robin Schaefer. I am located in New Jersey, the lovely part of the world. And I do analyst relations, which is something that B2B tech vendors engage in, kind of like public relations, and mid-size and up tech vendors all do this, analyst relations, and I bring it to the startup world. So I help startups who don't think that they're big enough understand how they can leverage industry analysts in a myriad for little money.
So Robin, you going down the shore? Down the shore this weekend? Only people in New Jersey go down the shore. Everybody else goes to the beach. People in New Jersey go down the shore.
Yeah. No, not come down the shore.
I'm originally from New Jersey, exit 9, I can say that.
Oh,
Aaron Winkler.
Sorry about the lighting, Bunny. Aaron Winkler, Chicago-based entrepreneur investor, very similar sounding background to Rebekah's in the fact that I've been a serial early stage executive for most of my career, but I've also been doing a lot of academic research into the areas and intersection between information theory, economics, banking, and I've been working on an artificial agent collaboration platform based on an actor model, in case there's any technologists in the room that know what an actor model is.
There you go. Andrea. Oh, she's always multitasking. Maybe she can't introduce herself right now. Oh, Annie.
Hi, all morning. I'm Annie, and I am coming from the influencer marketing world, so I can be the matchmaker between the client side and the creator side. So if you are interested in that, I'm willing to talk. Yeah, thank you.
Oh, thank you. Carol.
Hi, Carol Donahue. I'm up here in Toronto. I'm a data scientist and I provide advisory to startups in regards to LLMs and generative AI and product integration.
Oh, thank you. Just started pouring here in New York. Craig, always good to see you. And I know it's very early in your part of the world right now.
Yes, it is. Morning, Bonnie and Rebekah. You'll have to excuse me if you see me run out. It's because I have to get running out here in Los Angeles before I start my day. Thanks, Bonnie, for including me. Craig Isaac, you see behind me the logo. I'm with Chase out here in Beverly Hills, lifting founders and small businesses. I've been in specialty banking, so I always enjoy being in the creative field. And then my passion is AI, so I'll be spending the holiday weekend working on AI artwork. And Aaron, I always love when you inflect on the word banking because I know you're very passionate about banking. So it's always wonderful to have you in the room.
And it's always a pleasure to see you as well. And I love that. And I love that lighthouse.
I do too. Harold. Another Canuck. Oh, you're muted right now. Oh, I guess you can't talk at the moment. Going down the list. John Donovan.
Morning. Thanks for the invitation. Applied Learning Science, have a learning community. It's a service platform. We utilize constrained AI. I've been in this learning science space for 25 years, working with all kinds of large organizations all over the world, including U.S. Army intelligence. And I actually understand probably a fair bit about AI and the myth of what it actually can do versus what it could do. And we're using AI in a constrained way to create data sets around knowledge that individuals have that is not currently available within the AI databases. Thanks.
Nelson.
Okay, Nelson Hudas from Hudas Communications International. I'm in Toronto, Canada. I run a PR firm. I work with public and private companies getting them media exposure, earned media exposures. That means I get them on the radio, television, newspapers, magazines, industry publications. I'm the PR guy that goes out there and gets brand awareness and publicity for public and private companies, and I will put my information into the chat.
Yes, but how are you using AI in your business these days? Everybody's doing AI. I'm sorry.
Oh, I'm using AI in creating actually some news. I will ask it to create some pitches for me, and I will see what it says, and if I'll tweak it, because I don't want it to look like it's AI generated, because a reporter or editor can see right through that.
Yep.
So I will ask it to give me to create a pitch for me, but then I will tweak it. I'll put the human element in it and tweak it and make it sound like it came from me.
Well, I'm not going there yet. So Patrick, good to see you.
Good morning. Thanks for the invitation, Bonnie. And I'm based in Lower Manhattan, so that rain that you just got is just hitting us.
Yep.
So it must be heading south. So I work for a lower middle market investment bank called Paddock Capital Markets. We love working with founder-backed businesses and love making new connections with either seed stage businesses or beyond, and love to see how we can help. So look forward to connecting with anybody that's looking for raising capital, debt, or if they're considering an exit option further down the road. I know for most people, but we're here to help.
Oh, thank you. Ryan.
Good morning, everybody. How are we doing? My name is Ryan Hurd. I'm the founder of Caregiver Smart Solutions. We are a simple and effective way to know your loved one is okay. We're using AI for aging in place. I'm a multi-marathoner, a Ironman, a 5-time founder, 2 successful exits, and I got my run in before this crazy rain started. And of course, I'm a classic Jersey boy. Anybody got a problem with that?
So are you going down the shore this weekend?
Down the shore. I got my 3 boys. Tomorrow is field day for the one school. So I'm going over there to cook for field day. And I am also the mayor of my town. So Monday is Memorial Day. So
Yeah,
I
that's
have
right.
to be at the parade. Yeah.
Good for you. Scott Purdy.
Good morning. I'm at exit 3 of the New Jersey Turnpike, and I will be going down the shore tomorrow we have a place in Ocean City, New Jersey. Ryan, where are you mayor of? What town?
I'm the mayor of Pequannock Township. It's North Jersey, about
Yeah.
15 miles outside of Wayne, right? 15 miles outside of the city, next to Wayne.
Okay, yeah. My cousin's up in West Milford, which is probably a little west of you.
That's actually just north of us, I guess. West.
Oh,
Milford.
okay. Yeah. Anyway, I'm Scott Purdy with Sine, Philadelphia-based organization that we're creating a I don't want to say an app, but it's a thing on your phone that lets you make movies, multiple videos. What makes us different is that we have multiple inputs can be from anywhere. Quick example is if you're at a wedding, you want to do a project, you send a link to 6 or 8 people and you say, videotape or take video of different parts of the wedding, the throwing the bouquet, whatever. It automatically gets loaded up into the system. And then the system picks out the best through use of AI. It's going to be AI driven, picking out the best angles and give you a completed movie at the end. And so instead of waiting weeks and weeks, you're going to have this done in a very short amount of time. We're actually just about looking for seed investors or, early investment right now. So we can continue programming the AI, but it's going very well. And also I'm a part-time actor and I've been pretty busy this spring. There's things have sort of opened up in the acting field. So I enjoy that.
Wait, mayor and actor. Harold, I guess Harold put his information in the chat. And Andrea, I'm sure she's multitasking. She's a recovering lawyer and works with a family office, just invests to a family office. So that's it. Back to you, Rebekah. If you want to tell us a little bit about the fun, and then we'll open up the Q&A.
Well, I would love to understand what folks want to get out of the time. I'm happy to talk a little bit about the fund. I'm happy to talk a little bit about being an operator, flying between companies, founding companies. Why do people join, and what would they like to accomplish with the time this morning?
Well, that's why we open it up to Q&A, because everybody, each investor, each of our guests has their own expertise and superpowers, I like to call it. And so the questions are always different. So I'm happy to open up the questions. Go ahead, take it away, guys.
I'll start out. I think for us, one of the biggest things is networking, trying to find other people who might be, looking at what we do so we can get help and experience from other people who've already gone through what we're doing. And the other thing, obviously, is we're looking, for investments so we can take it to the next step. And I guess my question to you, Rebekah, would be, from your point of view, what is the best way to get in front of investors to present your product? I know there's a lot of different angles. Like, what do you look for? What's the most important, a pitch deck or a team? And how do we even get the opportunity to present?
Yeah, sure. So I should say, I said this to Bonnie like extensively. This for me is like one of a portfolio of things that I do. So I didn't like spend a ton of time growing up in VC. I actually grew up as an operator at VC-backed companies. So I spent a lot of time where you are, trying to raising money, refining pitch decks, managing boards, that kind of thing. Building companies. Most of my time I spent building companies, and then some of it is participating in fundraising and communicating the next milestone. So Flybridge has a few of these funds that are operator led, where the investment partners are not like professional investors, but operators who are out in the world, have extensive networks and particular operating expertise. And we use that lens to evaluate investments. So perhaps different than like a normal fund. The investment partners at NextWave are all operators, folks with other jobs. And the way that we think about investments by and large, or at least I do, and a few other of us, is there are certain things that I know really well. And had I free capital to be investing my own money in, I would invest in. Those things for me are B2B and like large considered purchase D2C companies. That's what I work on. That's my expertise. So B2B SaaS and SaaS enabled services, plus like education, real estate, those kinds of like large episodic purchases that don't happen very often and require a conversation to close. And what I look for in companies, again, is stuff I understand. So I'm a go-to-market person, I'm a revenue person. And when I work inside companies, I work on the revenue side, usually first. I'll often like branch into org work and COO stuff, but I'm, a pre-seed, you don't have an org structure. So we're not looking for like a great, well-structured organization. I really look for a founder who understands how they're going to go to market. And even if the hypothesis is wrong, has a strong hypothesis backed by data, expertise, some intuition about why their go-to-market is what they're trying first. The kinds of companies that we look for at the pre-seed stage are ones that can get really big. I don't think that's kind of a secret in VC. Right. It's not the right kind of money for every company at every stage, but for NextWave in particular, we're looking for companies that have the potential to go, 100x from where they plan to be this year. And that is like kind of a bar we have to crest when we evaluate ideas and organizations and technology, particularly for NextWave. If I was using my own money, I would think about that a little bit differently. Like a 10x return would be great for me and my personal cash. But for the NextWave money, the way that the fund is structured, we're looking for kind of big opportunities with high ceilings.
Harold put a question. He said, I guess he can't talk right now. Love to hear from you how you assess opportunities. What are the red flags?
What are the red flags? Yeah, I think like I look for, again, like I'm not looking at deals all day, every day and sort of like forming a point of view on the world of kind of like ways to evaluate deals out. My point of view on the world is very much driven by my operator experience of how can I even be a good evaluator of this business? I saw a business last week that I passed to the other partners because I was like, this looks interesting to me. I just do not have the context about this vertical, the regulatory environment, the competitive environment to effectively evaluate the potential for this business on my own. So like, that's not a red flag. It might be a great business. It's just not something that I know about. And so in those cases, we'll pull in help from other partners who do know about that business. But again, like I'm not the kind of investor or operator who gets really excited about technology with no market. There are investors and operators like that. It's just not me. I get excited about technology that's enabling people to be better at being people. I get excited about that technology that has a go-to-market that makes sense, a place in the market where it will fit. And that's not to say other kinds of technology like Instagram before Instagram was monetized are not high potential. They're just not things that I see easily.
Well, Instagram was acquired. I'd love your Ian has a question. I love the Northern Lights.
Thank you. Yeah, so Rebekah, you mentioned that you have an interest in education or education startups. But I mean, I work for an ed tech myself, and very few ed techs have the kind of growth potential that you kind of identify. So how does that fit? I mean, have you invested in any ed techs, or would you, or what do you, and I know you work for one yourself in effect, right? So how do you feel about investment opportunities in ed tech?
Well, I've invested an enormous amount of my time, which is perhaps the heaviest thing you can invest in a company. Right. And I think for everything I got back from that, the whole package of reward, that was very worthwhile. You know, education businesses, having worked in one, I'm not going to like lecture you about education business. I'll just give my opinion, right? Education businesses have a couple of pretty challenging dynamics for the kinds of infinite scale that VC likes, right? If you're going to take, as we did at Flatiron School, a relatively small number of people, for us, it was like in the tens of thousands, which is not small, but it's not, you know, Instagram scale, and change them a lot, right? Like you're going to do the Harvard thing, you're going to do the higher ed thing, or at least what higher ed promises. That takes a lot of investment in each student. There's not really a way to get around that I've seen. And those businesses can be, in my experience, unit profitable, sizable, but they don't scale infinitely, right? They scale incrementally. And so the way you think about capitalizing and exiting and growing that kind of business be like a little bit different than a commoditized piece of technology, right? Where you don't have incremental cost that comes with scale. We, at different moments in Flatiron School, we chose to invest in kind of like different places along that spectrum. But, you know, becoming part of WeWork, which was a business for, you know, all of its revealed flaws, that understood incremental cost with incremental revenue, that was a good fit for us for the time that we were there. Other education businesses, of course, have chosen to, you know, build really great versions of commoditized pieces that scale infinitely, like content. And that has a different kind of investment and scaling profile. But we chose really never to abandon this idea that you have to invest in every student to get the kinds of outcomes we were getting. Like, you were a barista, you're getting now an $80,000 job as a software engineer. That doesn't just happen, right? You can create some crazy dynamics where like you don't really invest in the student and kind of like students self-select their way out and only the best survive and get to graduation. You can do that with less cash, but we never did that. Like, for whatever it's worth, we invested a lot in evaluating students up front, educating them and pulling them through and helping them get a job. And that had really, really great outcomes. I think we maintained a really good brand over a time when not everyone did. But yeah, it's not Instagram.
Right.
Yeah.
So it's not the kind of company you would probably invest in now.
Probably not with NextWave, although there are dynamics that you can add to businesses like that make them interesting, investable in these funds. Like, Flybridge is an investor in Chief. Chief is a professional network for executive women. I'm part of it. I love it. It has physical spaces that are very capital intensive, I have to imagine, to run, like beautiful clubhouses, amazingly designed, full hospitality services. But it also has a large network that has a different pricing structure of women all over the country that don't have access to those clubhouses and access the network through technology and other kinds of more scalable pieces. So there are ways you can kind of like build a brand by providing that really high intensity experience and then surround the brand with other products that do scale with the profile that investors like. We did a little bit of both at Flatiron School over time. And of course we had different ownership and capitalization over time. And so that influenced a little bit of the way that we've structured our things, but we never gave up on investing in every student as kind of a core part of the brand building proposition. And I don't think if like the business was just that, I don't think that would be something we would invest in. It would have to have like a thesis around additional services for and products for the future.
That's a great overview. Thank you.
Yeah, I just wanted to mention, I was reading this morning that Khan Academy just did a thing with Microsoft where they're going to incorporate their AI into the. Speaking of investors, you saw that too. I just wanted to mention that. I know Annie has a question.
Hi, Rebekah. I would like to know what's your suggestions for the early stage founders, how to balance between growth and efficiency. For example, for the bootstrapping stage or the pre-seed stage founders. Thank you.
Efficiency, do you mean like capital efficiency, or what do you mean?
Yeah. I mean, for example, for the Uber-like business model at the first stage, they probably invest a lot, then they tend to increase the efficiency after that. So I'm just wondering, what's your suggestions for everybody at the early stage? Thank you.
Oh, that totally depends on the business and what you're trying to do with it. Yeah, so Uber made a really big bet, right? That they would be able to like fight the policymakers and change customer behavior, and smartphones would drive, like that they were timed correctly, and they poured a ton of money into that bet. I don't actually know how they're doing, or like if we would say that was correct or not. I mean, they definitely got saturation and scale. I am not that kind of operator, for better or worse. WeWork was a bit of an odd fit for me, actually, because I am the kind of operator who wants to be capital efficient all the time. It's not always the right call, actually. Right? If you're going to take a big swing and try to make a market and do what Uber did, like make a market to the extent where there's laws that have to change. They have lobbyists, like giant, and then we work a little bit like this too, right? Like giant changes in the way that people and systems behave and norm. It's not the right bet to do what I'm inclined to do, which is make $1, right? Prove you made the $1, try to make $2, invest some back into the company, right? Like go out to the markets and say, hey, we're making money. We can do more of that. Like a little bit of that is constitutional in me. And so I work on businesses where that's a good call because I know that's just how I behave. And I partner with founders who are more risky and visionary. So like, I can't give global advice about what to do there. And for me personally, like I haven't been a CEO in part because I know that's how I am inclined, is to be like, what is the next thing we can do to make another $1? It's not always the right call. So I just try to surround myself with people and ideas that don't behave that way so that we can like, hopefully kind of like duke it out until we get to the right call for the moment. But like, far be it for me to give you advice on like globally how to think about that.
Thank you so much.
Oh, Andrea has a question. It's in the chat. She said, speaking of pitch decks, I'm starting to hear more don't even have pitch decks anymore. What's that about? Any viable alternative? I've seen that too. And as somebody who reviews pitch decks before I I work with founders, it's like, I'm looking for certain points. Please address that.
Yeah, I'm curious to hear your take on this too, Bonnie. My personal take is like NextWave invests so early. We're generally first money in. We're not leads usually. We'll participate in a pre-seed or a seed, but it's so early that a pitch deck. It's a particular kind of media that like, I don't need to see your idea and your communication in that media. I also happen to be very bad at making decks. I'm like a great writer and I like to communicate in words. So I don't actually really care how founders communicate their idea and their progress, as long as it's like the best way for you to get it across to me. I could see a world where like, just like the resume, which is kind of like generally agreed upon as a stupid way to communicate a lifetime of work experience, but like recruiters expect a certain format and they're just like looking at that format all day, and it like knocks you off your flow to try to understand and internalize a different format. I could see a world where investors who are later stage or do this all day, every day, are like, I need it in my format to understand what's going on. I don't do this all day, every day, and I spend all day, every day talking to like diverse kinds of people in diverse contexts. And so I'm like happy to internalize your information in the way that you think you can best communicate it, especially at this earliest stage where there's not like quarter over quarter growth and like real projections and things that need to be in charts and graphs in a way that kind of squares with how I've seen them before. So I've seen memos, I've seen pitch decks that are kind of traditional. I've seen kind of like a series of looms surrounded by some content. It doesn't really matter to me, particularly at this stage.
But you're sharing the information with other people on the team. Then wouldn't they want to see it more codified?
I mean, it needs to be codified somehow. There's just a real like kind of art and arc to the pitch deck that it's sort of like, it could be something else. For me, it could be a memo. It could be like a really, really well-structured email. So yeah, I'm sharing it with other investors like me who spend most of their days doing other stuff and consuming other kinds of information.
Okay.
We see plenty of pitch decks though. It's fine to make a pitch deck.
Oh, thank you. Next question. Oh, Joseph, Patrick has a question.
Hey, so in terms of how NextWave wants to interact with the company that it's investing in, what are you thinking? Because I know you're an operator. Are you thinking that you're going to be more involved in kind of helping them grow the operations besides the capital that's being deployed? I'm just curious. How you're hoping to differentiate?
What else do we do?
Yeah.
Well, I mean, one obvious way we differentiate ourselves is that we're connected to Flybridge. And this is not a secret either. Like NextWave is a feeder to Flybridge, as are their other fully backed sub-funds. And so as an investment of NextWave, you get access to Flybridge partners. And so, if it makes sense for a follow-on round, that would be kind of an easy door to open. We also, I think that's right, the investment partners are operators. So instead, it's not like we have a fund team who OPs who service and advise. We're just kind of informally available for founders. And a lot of us are doing the same stuff that they are, or very, very recently did that. So I think that's an attractive proposition for super early stage founders. Is there's like a dozen plus people here who are various flavors of operator, and have a relationship with this whole investment partnership who are available to like call.
Oh, it's too bad that Harold isn't free to speak. I see that he offered some advice there in the chat. in a nutshell when we were talking about
Yeah,
investment
this is good
advice.
advice.
Yes.
Does the business logic make sense? What value does the company create? One of my favorite things that one of the Flatiron School founders, Adam, said a lot was the point of a company is to, I mean, I'm sure he got this from somewhere. It's not an original idea. The point of a company is to create value, and only when you create value, you have the opportunity to capture some. I really like that framing of like, we got to make money, we got to make value, but you get to take value if you create more value than you take. So what value is the company creating? I think it's a really good framework. Harold said, unit economics, TAM, sure, and a clear understanding of the problem and the user. That's my kind of go-to-market lens. Is I look for founders that have a good understanding of who would be buying their product and why their product is compelling to buy for that person.
Craig has a question.
Rebekah, thanks again for taking the time. Quick question. It's interesting because you share the idea that your founders are also working, right, or pursuing other objectives while you're working with them. And that seems to be kind of cutting edge, because many of the times the ventures want people to be all in, right? Or oftentimes will say they want to give up everything, you know, so that they're 110% in the project. So how have you found that that benefits you and the founder if they're basically balancing both?
Not founders, investment partners. Yeah, just the partners of the fund. I don't think you can be a founder and do a bunch of other stuff for too long.
So then, even taking that, when you take a look at the investor, what does that definition mean? Meaning, is that someone like yourself? Meaning, are you much more of a conglomerate of people that are leaders in industry that have come together to invest versus a accelerator, a VC, where you're putting 100% attention in? Is that kind of what your model is?
Absolutely the former. That's a good way to say it. Flybridge proper, Flybridge, the main fund is a set of professional investors and support staff. NextWave and other pre-seed funds that Flybridge backs is a collection or collections of operators and of various kinds. There's one that's female founders. We are kind of new. We're like old New York City startup people. No one said old, I said old. But we're like first wave New York City startup people. That's what this fund is. There are a couple of other ones that have different kinds of folks that make up the investment partnership.
Right. X Factor focuses on female founders, which is part of Flybridge too. Harold has a question. He said, what is your decision-making process? Who decides to invest? All managers, a majority per person. I'm also wondering if Flybridge gets involved in that process too, or if the new fund is just a totally separate entity and they come in later. I mean, later.
Yeah. So we decide to invest. There's a minimum of 2 partners need to sign on to the deal. And Flybridge acts as advisory, basically, allows the fund to make decisions on its own, but there's no, I mean, we just started in January, but I haven't seen a deal yet that hasn't gone to the Flybridge partnership for discussion, which I think it would be silly for us not to do that, given we have a stable of professional investors who are supporting our investment decisions. But 2 partners from NextWave is the way that we think about making decisions.
Oh, thank you. Next question. I know one thing.
I'll ask something. So Rebekah, you mentioned you have a big focus on AI, right? Now, so if we obviously you have NVIDIA and you have OpenAI that are profitable operations, but apart from them, I mean, I don't have the impression that many kind of AI first companies are actually generating a lot of profit. maybe you have a different view, but that's certainly what I have noticed. And there's been a number of kind of flameouts and, kind of companies that sort of had, like a lot of defections and problems because of this kind of absence of profit. So what is your view on that?
We have a pretty broad point of view on what an AI-driven company is. And my thesis, just like as an operator for stuff I spend my time on, is I personally like companies that use technology to make people more powerful.
Mm-hmm.
And that makes my lens on AI like kind of specific. Not every operator or investor will have that view. But I will be looking for, partially because I understand companies that are using AI capabilities to make humans better at human work. That, I like companies that are like perhaps a little boring and like solve a very known existing problem. So, I don't understand the way in which NVIDIA's chips have evolved. And there's kind of a lot that I'm not an expert on in some of these cutting edge AI capabilities, but the fund in general, I think, believes that this is a paradigm shift, like cloud or mobile. So it's not there's not one way or one kind of implementation paradigm that's gonna drive all of our investments. It's like the ecosystem is going through another massive shift, and it's being driven by AI. That's kind of how we think about it.
Cool, thank you.
Does a NewCo have to have an AI component for you to consider an investment?
That I would hesitate to say yes to have to, but that's really the focus of the fund. Is like, we believe that AI will drive the next wave of great, enormous companies, and we're looking for those.
Okay, it looked like Craig was going to say something. I don't know when you're speaking.
Oh yeah, Craig, you raise your hand.
I did, excuse me. I'm also trying to help out my son on the side here, so I apologize. Multitasking on this very early morning. My follow-up was, I'd love for you to reflect more on Chief, only because I have seen so many women, especially over the last couple of years, that are thought leaders, that participate in that. And again, as someone on the outside, I'd love to learn more about that, because it seems like everyone's very passionate about that. And a lot of people have become very involved as thought leaders and women. And so I'd love to hear a little bit more about what they're doing, because I only see people listing themselves as chief, but never really understood how that wraps together.
Sure. And then I think Zarin is next. So yeah, I'm happy to talk about Chief. I've been a member of Chief since 2019. I was one of the first 100 members. I think there's 20,000 now. I joined so early because I was getting to a point in my career where going to meetups and just talking to people was not providing enough targeted value for me anymore. There was like a long stretch where, in that kind of nascent New York tech period, where like the early aughts, 2010s, New York tech was becoming, was like a small community and then was becoming a big community. It was actually valuable for me to just go understand what people were doing and thinking about. And then as I got more experience, I wanted a more targeted group of peers and people senior to me, to learn from and learn with. So I started talking about this like publicly to see if anyone kind of like knew something I could join that would do that. And like 7 people sent me the Chief press release when Chief announced. That was like, this is a community of senior executive women, and that's what it's meant for, to be in the same place as people who are peer, potentially senior or a little bit junior to you, but like in the same part of the spectrum, to learn with and learn from. And that was pretty interesting to me. Their flagship offering is monthly group coaching sessions. My group has been together for 5 years and happens to be like a really successful example of one of these groups. It's very valuable. I don't know if anyone's participated in like masterminds or YPO, but it's very valuable to get together with like 8 people facilitated by an expert and talk about challenges and give peers advice and like hear what everyone else is struggling with. And then it's really empowering to just have a place to go that's like, this is made for you. I don't talk that much about being like a woman executive, like the woman part, because I'm just an executive and I happen to be a woman and like, it is what it is. But having a place to bring clients and hang out that's professional and made for me is like pretty special. So I spend a bunch of time at the clubhouse and on virtual chief stuff. I don't know if that answers your question, but the main offering is these coaching sessions, and then there's clubhouses, there's programming and events, there's like access to a network of other members. It's like a YPO-ish model.
Oh, thank you. I always wondered about them because I've considered joining a few times, but never quite pulled the trigger. I might look into it more closely. Darren has a question, and you should introduce yourself, Darren. I knew you got here a little bit late.
Yeah, exactly. Sorry, I was in a meeting. So I'm based in Zurich, Switzerland. I have a banking background, and I'm currently focused on strategic partnerships and business development, mainly in finance industry, but also e-commerce. So content is a very interesting area because we work with on the e-commerce content community and commerce, and how to monetize all of that. My question was related to this AI, because I go to a number of meetings, and always it's, I can say, I guess there's the hype word now, AI and AI investment, AI this. But for people who are not technically, they don't have a technical background, everybody has a story, everybody has a nice presentation, but what is the technical audit? Like, why this AI company and not the other AI company? Can they deliver on what they promise at the time and budget and that they say? I know situations where, the reverse was true. So the question is how to do the due diligence of AI investments, or of which expert maybe is better to collaborate, because I don't think one can do it if they don't have that technical background.
Particularly for investments.
Yes, if they, if someone wants to invest in this sector, what's like maybe technical audits that they should do to see if this project is even viable? Because a lot of things sound good, sound exciting, but they're more fiction or sci-fi than, near reality. So that's, and you want to get your money back, at least what you invest, if not more.
Which I would like to add that the LLMs, the AIs are still more or less a black box. Even the developers don't quite understand. Just wanted to add that. Go ahead, Rebekah.
Yeah, that's a good question. I don't know what kind of technical diligence we've done on the investments we've made already. I haven't led one yet. And I think all diligence at this pre-seed stage, first money in, product is nascent, team is teeny tiny, no expectation that the thing is fully baked. You're usually raising money to bake it. It's pretty different than a technical audit that you would do, or in the seat I've been in the past, expect to be done at like a Series B, when you've got a bunch of customers and the round is for scaling up usually. We have technical folks on the team who can participate in and like throw questions around to understand what exactly the technology at the stage we're investing in is doing and try to ask intelligent questions in that way before we even move something to kind of like yay or nay phase, or you know. But I think like at this stage, a technical audit is there's not a ton to audit usually.
Yeah.
Yeah, I understand.
You precede.
Yeah.
Oh, you know, Patrick has a question, and Randy posted a question in the chat a while back. Randy, do you want to ask your question?
Yeah, sure. Good morning. So I'm Randy Seif, based in New York City, and we are launching a global impact luxury brand. And we sit at that intersection of sustainability, fashion, philanthropy, and technology. And my question was around the technology because you mentioned NextWave invests in technology based. Technology is a huge, you know, it's one of our main it's what facilitates the entire business model, which is made to measure and on demand, right from the customer's phone. And so we make everything in the customer's own body measurements right from their phone, plus customizable design options. And then they see a 3D simulation right there on their phone. And this is all in less than a minute. And then from there, it sort of travels through our digital ecosystem, if you will, where it lands at the factory and gets made and shipped within 2 weeks. So this is a brand new thing. It doesn't exist in the market. And then the other pieces, the other pillars for us are that we treat the planet as a stakeholder, and we develop all of our own proprietary fabrics and materials and packaging with circularity as that key driver in the whole process. And what we're doing with this technology is allowing us to reduce waste and overproduction and cut down on those costly returns for the fashion industry. So it's really, we exist to be that agent of change for the whole industry and serve as a lighthouse as the future of manufacturing by solving all of these current problems in this linear system that exists currently. So my question really was, being that the technology is a piece of this, is that something that NextWave would consider?
Yeah, absolutely. I mean, the investments that we're thinking about and the way that we're thinking about AI as, you know, driving the thesis of the fund is what can we do now that we couldn't do before? And again, it doesn't need to be OpenAI, a company that is exclusively, you know, an LLM or an AI model. We're looking for everything across the spectrum of AI as the business to businesses facilitated by this kind of technology that wasn't previously available, kind of like Uber, right, facilitates matching drivers with passengers because mobile is available. So can certainly be a component, doesn't need to be the entire business and doesn't need to be the AI proper that you're selling.
Okay, great. Thank you. Well, I'd love to reach out to you and maybe have a conversation.
Sure.
Thank you.
I didn't know if you want to share your contact information in the chat. That's up to you.
Oh, I'm like very easy to find. There's no other Rebekah Rombom, but I'll send my.
Especially the way you spell Rebecca, which I've always wondered about. But
yeah, this is. It's the Jewish biblical version. Very short story.
Thank you.
So.
Thank you.
Patrick, you had your hand raised earlier.
Yeah, my question may have been answered, but it's kind of one that I keep running into. I feel like every business now has decided to be an AI business, and it's just seems like an adaptive program that is basically scouring the internet and compiling together a slightly more complicated search engine. And I was just wondering, how do you, your focus on AI businesses, how you define it, or is it more you know it when you see it?
So the way I think about this again, and like I go back to, I'm primarily an operator. Most of my experience is in operating, and most of what I still do every day is operate companies. I, as an operator, wouldn't want AI inside my business just to have AI inside my business. And so I'm looking for businesses that are using this to accomplish something that wasn't previously able to be accomplished, whether that's like a net new activity or we're making people better and faster, and allowing them to focus on people stuff using some new piece of technology. We used to talk about this a lot at Flatiron School in the context of the internet as relates to education. And I think about this in that same framework. So the internet is this amazing democratizing tool for education, right? You could theoretically have everyone in the world have access to the best education in the world because of the internet, right? But the right way to do that was not what we first did, which is put a camera in the back of a giant Harvard lecture hall and tape the class and say, like, education is now free for everyone. It didn't work that well, right? Like the Harvard experience and the education you get at a residential four-year liberal arts program is not the content of a lecture that's commutable to a video online. It's something else, right? So what we always said we were doing at Flatiron School was we wanted to, like, the product vision was how can we harness the internet in a way that makes sense for the internet to make education better, more accessible, more impactful, more effective. The analogy, right, is like, I don't have it as fully baked because I haven't said it for 10 years about AI, right? But the analogy is like, we're not just slapping AI on top of a bunch of stuff we already did. What is the right way to use this tool or medium to transform our business and make it better, more impactful, do something it couldn't do before? There's companies I work in as a fractional leader where we don't use AI for what I do at all. It's like we do B2B sales, and probably I could put it in the CRM and get some like better intel out of CRM, but people have to call our clients and talk to them about the value of the service. And like, that's a lot of the core of what I work on inside these B2B companies where I'm managing revenue. I use an AI for that conversation. So there's like tooling around it, right, that can make probably me more effective at that, and make people more effective at that. And those are the kinds of things we're looking at. Anyway, I'll stop there. Does that answer your question a little bit?
I think so. I mean, I don't think it's the easiest question in the world to answer. I think what a lot of folks are thinking is all these companies that now have AI in them have a multiple that's a lot higher. And so how do I get that in there, at least from a monetary perspective?
Well, it's my job to sniff that out, right, as an investor.
And so, hey, how does that fit in? And everybody's looking at the video, even though they're more of a hardware type of focus, from what I understand. But I just love hearing different perspectives on it, especially somebody who's focused on the space as you. So thank you. Very insightful.
Oh, Harold put a comment in the chat, but dev event with Google, I think you saw it. I wanted to comment on AI, and because you had mentioned Uber, and when Uber first came out, it was wonderful. You could call it a car service, and they undercut cabs, which were expensive, and blah blah blah. Well, last week I was way downtown taking an Uber home, and you couldn't believe the price. So I went to my Curb app, which is New York City taxis, and it was less than. So I opened Lyft too to see what the price was, same as Uber, and the Curb app, the New York City taxi, which showed up right there at the restaurant, was less than half the price. So I wonder what's going to happen when AI is established and it's integrated and everything, and everybody forgets that there's another way to do things, which is more cost beneficial. Time will tell. But
I just wanted to make a mention. Maybe it has to do with what Patrick was asking. Like, I remember a couple of years ago, we were talking, it was all machine language, and I went to AI. And like, for instance, what we've developed could work just as it is. It would do the simple thing of taking all the input, creating a professional movie at the end. But what we want to utilize the AI for is so that we can have it do specific things like pull everything out that is colored green, or everything with the number 8. Or do you want to make a movie in the style of a Scorsese's movie? So that's what we want to develop the AI for, to give us all of the other actions. So that's what you look for the early seed investment in for, so that we can do all that programming. Because as it is now, it would work great for B2B. And we're going to target it to some B2B things right now, and we wouldn't really need to do anything. But we don't want it just to be that simple app. We want it to expand into doing all kinds of things that the people can be creative. So we have some people doing program AI, and the big thing nowadays with all the open AI and that's available, you need someone who has that experience, who can look at all these and pull it together. And that, it takes a little while for people to develop the really good AI experience. So our internal programmers are helping with that, but we are reaching out to regular programmers. I just wanted to mention that, just kind of go through what our thought process is, why we would want to be AI driven. As I said, right now it works. It's being used by something called Magnet Magazine for a couple of years now, just to do the simple tasks. But thank you anyway for allowing me to speak.
Do we have it? Do you find that companies are throwing AI, because all investors are focused on AI right now? It's like, are people just all throwing AI somewhere into the mix just to get investors' attention? I'm thinking about the comment that Harold picked up on.
Go ahead.
I was going to say, it's the new blockchain.
Right.
I haven't seen that, which also might be because we're so early that there's, right, it's, if you're building something from scratch, you're kind of building what you're building, right? If you're maybe like a Series A trying to get to a Series B milestone, I could see potentially trying to like integrate an AI story into your narrative to get the attention of investors. I haven't seen that at this early stage. I think just because of the way that we're positioning ourselves, and if you're going to start a company that doesn't need AI in it, you just might not come talk to us. So not in my world. I've like heard the same chatter, but not something I'm sort of seeing in my day-to-day.
I have a question. Since we're talking AI, how are you guys looking at the ethical use of AI within the companies that you're exploring? Like, what are your antennas, looking for and picking up on?
That's a good question. Haven't thought a ton about that. We haven't kind of developed a point of view as a fund. What's the or as a partnership? What kinds of things are you seeing, or what would raise your antennas?
Well, I mean, there's obviously the issues of copyright, right? That was the first thing out of the gate, and there's people using voices and images and things like that. And then there's just like just because you can, should you?
Right. Yeah,
right? Like that. I mean, David Magerman, a couple of months back was speaking about this. He's an AI investor based out of Philly. It's like, just because you can, is it the right thing to do for the world, for the business, for the economy? So those kind of ethical issues that, you can make money, but should you? Like,
you look at the whole.
Yeah, I see what you're saying. So maybe it's that for us so far, those kinds of companies that would have these like glaring questions haven't risen to the point of internal discussion amongst the whole partnership. So we haven't looked at, and maybe that's because they're getting filtered out. Maybe that's because it's nobody's expertise, like companies that are dubbing people's voices and those kinds of things that are that would raise that question at the outset, I guess. I looked at a company that was like we're in a very heavily regulated space, and we're looking at all of the regulations in this space and like giving business operators tools to operate more effectively in the context of these regulations so they don't have to read all of them or hire a lawyer. That kind of thing. And that's like squarely in my wheelhouse too.
Those are ethical uses.
Yeah, so I not to say we'll never see that or we'll never consider something with these questions. Just for whatever reason, they haven't risen to the point of serious discussion amongst the partnership to date.
Well, we have that whole Sam Altman, Scarlett Johansson brouhaha going on right now, where he did approach her to see if he could use her voice. She said no, so he did it anyway. But then again, he's Super Sam.
Is that right?
Huh?
I don't. The news I read is like
sorry.
long-form journalism that's like 2 months old.
Oh, okay.
So I haven't seen
Well,
that
you have two
yet.
very young children. You get a pass. If Sam Altman is on the board overseeing AI safety and blah 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 at the federal level, and he goes and violates her privacy, that's worrisome.
Yeah, like I think about this from an investment perspective. Again, it's like deeply influenced by my perspective as an operator, because that's what I know best. Would I spend my time on, would I operate in, would I make a bet on a company that could get like completely shut down by not even a new regulatory regime, but like an existing rule or law? I personally wouldn't do that. I mean, to Annie's question, like I personally wouldn't do that. Others might. That's not an investment that I would be excited to bring to the table and like defend the high ceiling of across like a decade long or like 6 to 7 year time span. So like for me personally, I'm more interested in these like less sexy, less controversial business uses because it's what I understand and it's where I've operated in the past.
Yes, and as Ian observed in the chat, Altman fell back to that old Silicon Alley mantra: ask forgiveness. And I'm curious to see what happens with Reddit as well, since it's integrated. The two are integrated. I'm sorry, somebody had another question.
Oh yeah, I had a quick question, Rebekah. Do you get involved in recruitment for your portfolio companies? Either consultants or employees?
I think most investors will say that they'll help companies where they have the capacity and knowledge to help, and same with me. Like it's like a boosted version of just being a person in my network. Like I'll basically help anyone with recruiting if I know someone who could be a good fit for their job. If you're a company I have a vested interest in succeeding, right, all the more. But in general, as like a person who has a sizable network and is interested in helping that network, I'll do that anyway. I'll definitely do it for a portfolio company, just like the way I would do it for a friend or former colleague. I think that's the same for like a lot of business advice and counsel. And if a portfolio company called me and was like, hey, I really need help thinking about how to structure my sales team or where to focus on my go-to-market motion, I would take that call, of course, too.
Right. I mean, I was thinking about this AI audit concept, and I do know of a couple of people that might be helpful there. If you wanted people that have like broad understanding of a lot of different, current aspects, and might be able to help you evaluate, whether a particular company is actually on the right track as far as their use of different kinds of AI.
Yeah.
So, anyway, I've sent you a connect request. So
great. Thank you.
Thanks.
So I know everybody always wants to know, what size checks are you generally writing these days?
Around 50K.
Okay.
So we'll participate in a pre-seed or seed, and we'll generally not lead. But we want to be part of a bigger round that can get you meaningfully down the field to that next milestone, next raise, or whatever that milestone is for you.
So you're not focused on parsing data at all, right? Which I guess was 2022 at this point, but just asking.
What do you mean?
Because using data, collecting data, organizing it was a big focus of investors until AI came along and took over entered the zeitgeist, and then everything shifted. So I'm just wondering if you're looking at that as well.
Oh, a company that would collect and parse data.
Right.
Yeah, I mean, I think for a lot of those use cases,
right,
it's not my expertise, but I would venture that for a lot of those use cases, you'd want some kind of like AI component to do it faster and more accurately.
Right.
I love a data parsing company, and I think about a lot of the work that gets done in the companies of size that I work in, around 1 to 80 million, and it's like people trying to figure out what data means.
Yeah.
So that is actually an area I'm really interested in. I think there's some pretty clear AI applications, and actually what I worry about in that space is going to get really crowded.
Thank you. Next question. Or comment.
Yeah, if anyone wants to add anything, please.
I don't want to pile on here with too many questions, but are you familiar with this company called Section School? You know, Scott Galloway is the
okay
co-founder. It's an interesting ed tech startup. They were founded during the pandemic. It used to be called Section 4, right? And they were doing like short live online business courses, like 2-week MBA programs for pretty substantial fees, and they did very well until the pandemic started to wane. But nevertheless, like they still seem to be doing better than many other ed techs that I've looked at. And he has a no accreditation law, which I think Flatiron, they also have. You didn't
no accreditation.
So he basically said, unfortunately, our company has not followed that path. We are pursuing some kind of accreditation, but it hasn't been an easy path. So why did you not pursue accreditation at Flatiron?
Yeah, I mean, we talked about it probably like every 18 months. It's really operationally heavy. That's basically it, right? It's very operationally heavy. It's a high overhead, right? You need a minimum amount of overhead at all times. It's not necessarily overhead that's tied to moving the business forward. It does unlock access to federal funding. So additional access for students, potentially you could grow the size of your business that way. We just always came down on the side of we want to move fast, and we want to spend all of our resources making the business better and like making the student outcomes better. And we were never totally convinced that the accreditation path would allow us to do that, and particularly that all the activities you had to do in order to maintain your accreditation would meaningfully move us towards better student outcomes through that investment.
Great, thank you.
As an ed tech guy myself, I worked for a company that wasn't accredited, but worked with a lot of accredited institutions. With Flatiron's customer base, they didn't care about the college degree at that point. They just wanted a job. So you don't really need accreditation to get a job. You need the accreditation if you want a college degree or some sort of formal diploma. So I think it comes down to the audience of who you're trying to serve and the ROI, right? Like Rebekah was saying, it's a ton of work.
Yeah.
Agreed.
The next question.
I can't believe I've been mostly talking for over an hour. Is there anything that anyone else wants to say?
And we appreciate, since you are also an operator and you've worked on now both sides of the table, and startups don't have guardrails. What are some of the big problems that you see, working with these companies? What mistakes do they make? Where do they miss? The ones that might be glaring.
One of my favorite things to say to teams. So I'll often come into teams that are operating with a large set. So this is I think this is the case with like almost all teams, right? The places where this is not the case are famous, like Netflix. Teams will often have a large number of fairly brittle rules, and not a ton of context about why they exist or what they're trying to accomplish. So as a founder, you don't really operate this way, right? Like you understand your mission, you understand your values, you're like constantly reprioritizing all the time to accomplish your mission and keeping with your values. But once the team gets to be more than like 5 people, people like internalize rules, and not often because the founder's like busy doing stuff, not communicating the guidelines, the guardrails, like not the mission and the values. So like one of the first things I'll often do in a team is establish you're allowed to do whatever you want to accomplish the mission in keeping with the values. Here are a few guidelines and guardrails. And like usually they're the values, a set of behaviors that are driven from the values, a set of pretty high level objectives and KPIs that, you know, tell us that we met them. But there's like a core foundation of stuff that I want you to be able to look at to say, I can make this call on my own, or like this is a good call or this is a bad call. And then the other kind of framework I always tell people is, if the thing you want to do is good for our stakeholders, which is usually the customer, the company, and the employees, the customer, the business, and the employees, it's legal and it's not expensive, you should just do that thing. And then like generally people will come to me if they have a question about whether this is legal. Good, I'm glad you came to me. Or like, is this amount of money expensive? Good, I'm glad you came to me. You know, but like, I don't want people coming to me to spend $100. I also don't want people wiring like $20,000 somewhere without asking.
Right.
So I actually think this is like a bit cultural. Where are we looking to figure out what it is we can do and not do? And I found the combination of mission, values, a small set of core KPIs, and that like good for everyone, legal, inexpensive, to be kind of enough to like get a good outcome in most situations.
I guess now with the OpenAI in particular, you have to add ethical to legal.
And if you hire the right people, then
Yeah,
you should be able to trust them.
Yeah, ethical is usually taken care of by the values. I haven't come upon a team where I'm like, also, is that a moral thing? And it's not taken care of by one of the other concepts. And then also legal, right? Like if you're gonna take copyrighted material and like distribute it for money, like you'd have a question about whether that's legal, I would hope.
I'm not gonna mention the AI world, but and that whole copyrighted material thing. Look at the what's her name, the comedian who actually lost the case, Sarah Silverman. I don't know why, but she did. Next question. I know we're running out of time, but we have time for another one. Ian, I know you have a question. Feel free.
Well, I mean, we talked about a lot of current, but do you have any thoughts about trends over the next year? Like, I mean, there's a lot of speculation right now about different things, but I mean, what do you see as kind of like strong trends in the short term anyway?
This is another place where I'm going to be like disappointing and boring. I don't care. Like I just,
okay.
The technology is going to get more widely adopted. There's going to be behaviors that everyone does that are, AI is embedded in them, kind of like the way we all now use a word processor and a cell phone. And I think companies that kind of like ride that wave, like the way that, right, there's a lot of really big companies that rode the wave of mobile and then before that cloud. So kind of like noticing the ways in which these things are being adopted as a standard within businesses and also consumer behavior, I think will be important to form an investment thesis and, think about if you're thinking about founding a company. I don't follow trends. Like I don't own any Bitcoin. I never did. It made me too nervous. Like I just put my money in the next fund. I think that's like a good analogy for how I think about trends in this space. Like I want to understand what's becoming the paradigm, and I want to be ahead of understanding that by a bit.
Right.
But I don't do trendy.
Oh, no, I get you. But I'm glad you mentioned word processing, because to me, it's like it's a useful comparison. Because word processing, I mean, it's very valuable. Every business uses it, but it's not exactly a pot of gold. Like,
No.
I don't think even Microsoft makes a significant profit on Office anymore. You know what I mean? Obviously,
right.
it's standardized technology now, but like it kind of illustrates the point that something can be useful and can help businesses without necessarily itself being a vast source of profit, right?
Well, it's also, I mean, the Microsoft case, I don't know how they're using it now, but it's an enormous distribution channel, right? So if you
Yeah,
can be an investor said, yeah, huge. An investor said to me a few weeks ago, the company that made the most money off of refrigeration technology was Coca-Cola. Like, I think that's a good way to think about this, right? Like, what are the pickaxes and shovels that are going to enable this next wave of big companies?
Right.
And what are
Great
the
point.
products that come out of that,
Yeah, thanks.
So any last minute questions? Otherwise, I'm going to ask Rebekah if she has any words of wisdom she'd like to impart, or words of warning, either one. Up to you. Or something you'd like to
you
leave
guys
us
got
with.
you guys got my best wisdom frameworks or my management frameworks again, because that's what I've been doing longest.
No,
Like,
it was
is it legal?
fantastic. Right.
Is it
Those
legal?
points,
Is it good for everyone? Is it expensive?
those are great points, and thank you. Especially helps with, like I said, the guardrails, because so many times founders just go off the rails for the smallest reasons and unnecessary, mostly because they don't, and you like this one, they don't communicate with their investors when they have problems. They want them to think that everything is fine, and the investors are there to help because they have people like you there who can jump in and been there, done that.
Yeah, I think part of my jobs, part of what I do is culture building and executive coaching as part of this consultancy that I'm partner in. And I actually think a big part of this is like understanding yourself, what you're good at, and who you want to be in the world. And if a founder has that down well enough, they're not going to get seduced by engaging in these behaviors that are kind of like questionable, off the rails with values, not aligned with the mission, not good for the customers, or it's harder to kind of find yourself deviating onto that path. You have a really good sense of what you want to be in the world and bring to the world. The shorthand for that is self-awareness, but a lot of the work we do in the exec coaching company is self-awareness, right? What are your personal values and how do you want to behave in the world? And are these behaviors you're doing aligned with the way that you want to show up for your company and your community? So it's not kind of a formal investment evaluation piece, but it's definitely the self-awareness and introspection is something that I've seen help founders kind of like make it through these tough decisions about where's the guardrail and what do I do here?
Thank you so much. I appreciate it. Rebekah, thank you so much for your time and pearls of wisdom. And thank you,
everyone.
And thank you, everybody, for being here. And I want to wish everybody a wonderful Memorial Day weekend. Now that I know it's this weekend, so enjoy it. And with Joseph has
weekend, everyone.
Joseph.
No, I was clapping.
Oh, okay. So
thank you.
And we'll see you back here in 2 weeks.
Nice to see you all.
All right, thanks, everybody.
Thank you.